Today, what to ask when seeking financial advice. Hello again, it's Martin North from Digital Finance Analytics. Welcome to latest posts covering finance and prop news with a distinctively Australian flavour. Today I'm joined by Tim Fuller, Head of Advice at Nucleus Wealth. Hi Tim.
G'day Martin, great to be back on the show again.
Well, I appreciate your coming back on again. We made a show a couple of weeks ago which was sort of high level what financial advice is and how it works. But frankly, there was a bunch of questions that we couldn't get to. And, you know, one of the issues I get often when I speak to individuals is they don't even know what questions to ask about the financial advice process. So I think there's a conversation to be had which is a more granular and more detailed one about the process of financial advice and how to make sure it works for you rather than against you.
Oh, look, 100%. Yeah, look, just like any in any part of a person's life where they're engaging professional help, it always pays to make sure that you know what you want, and also you're asking the right questions of that person so that they can work out exactly how they can help you.
And, you know, as with all of these things, this isn't financial advice in its own right, but there are some principles that I think it's worth reflecting on. And I guess the first one is, as we briefly touched on last time, there is a mixture of different types of advice.
Absolutely. Yeah, look, and this is sort of something, I guess, that's grown more relevance in later days, I guess, in the sense that the ability for advice to be both collected and engaged upon and then also delivered has broadened, and the opportunities out there for anybody to, I guess, have it perhaps one particular area of their life they want to focus on and have that, focused in on it and completely solved. And then, of course, broadened out into other areas as well. And, of course, finishing up at the full advice piece where you can go through warts and all, every component of your life and feel confident that, you know, you've got a good solution there.
Yeah, so I think of it a bit like a pyramid, right? So basically, at the base of the pyramid, it's pretty much everything. So, you know, it's about your retirement, it's about maybe your property, your mortgage, pretty much everything, right? The whole of your life, everything, right? And that is the most extensive type of advice, but it's also the most expensive. And if you go back 10, 20 years, that was always where the conversation started. But as you go up the pyramid, you can effectively narrow in and become a little bit more specific, a little bit more tailored. And as you go up the pyramid, and more tailored, essentially the delivery mechanism and the range of questions that are asked narrows, but also perhaps can provide more flexibility.
Oh, look, absolutely, yeah. The key bit, and I guess the pyramid's a great analogy in a way because, in a sense, you've got some underpinnings or some foundations that you should get right before you start launching into other areas, and particularly that's relevant in a person's financial future and you know where they're starting from, you know, can really determine where they end up. And so that's quite a handy analogy, I guess. Perhaps I've used it in a slightly different way, but I guess the key point is for most people they've got one big element of their life or one big goal or one big problem that they might be losing sleep over, or there's that little bit of a nagging thought that gets louder and louder until you decide, okay, I want to do something about this. And the beauty of it then is, and this is where I guess, you know, talking about the article that I've written is looking into this full advice piece and going, okay, well, look, do I get it on the table, talk to somebody that obviously I need to establish trust with, and then, you know, follow perhaps their recommendations and continue that on an ongoing basis. But it's really about saying, okay, well, by sitting down and pulling apart everything that you've got. Now, for a lot of people, and this is sort of very relevant to the ages and stages, as I call it, of a person's life. In the early days, many people feel like they actually don't think that they warranted financial advice because they don't have any finances. You know, like, why get advice when you haven't got any finances? But it's actually probably more so often than not the opposite way around. The early days is when you can start doing things, if you set them up well, that can make a really big difference at the other end. Superannuation is a really good example of that. people in their 20s and 30s that do something positive about their super will end up with a significantly more, or be much further ahead of the pack later on, because they've thought about it in the early days and had the power of compounding. Simple example, I know, but what it means is then down the track, of course, you will have the finances to seek further financial advice. And so going to your point, it's about then finding, okay, well, look, I only need a little bit of help. I want to have a large superannuation balance, so I want to set myself up so 40-year-old me or 50-year-old me gives the now me a pat on the back for doing something positive and getting that going. And then you go, okay, well, how do I go about finding those solutions? In the past, it was just go and see a financial advisor. You probably have to, pay a lot of money and spend a lot of time, and obviously find the right advisor for you. A lot of those things take up a lot of time, and I don't know about yourself, but everyone's pretty tight on time these days anyway. So that's where obviously some digital advice may come into play, or what they call limited advice, where you can go in and see an advisor or start up a relationship. It could even be over Zoom these days, where you say, look, I'm just looking at this one area for now. If you solve that, then you've potentially won yourself some work later on as well. So everyone's a little bit different, but the beauty of the digital, or at least looking online first, is that you can get some solutions. You can get a bit of a roadmap in your mind of exactly what amount of work you need to do. You might be able to even get the solution online, and there's a number of solutions out there that can provide it to you. Generally, it's instant and free in a more basic format. And if you find that it goes outside of that, or you're not fully comfortable with those solutions, then you can obviously then step into engaging with an advisor.
But I guess the issue is, if you really haven't done that foundational thinking yourself, right? There is a risk of jumping in halfway up the conversation, right? So, I've seen a few people say, well, I'm sure that I'm going to need a property, and I'm sure I'm going to need superannuation, right? And so they jump into, right, so I'm going to do this, I'm going to do that, right? Now, that may be the right, but have they actually started the journey from the right place? And sometimes I rather feel that people take the journey backwards, which is they sort of start with a point problem, right? And then they sort of come down the pyramid a bit, and well, hang on a moment, there's a question over here which probably impacts the question over there that I'm trying to answer. So it's a really interesting conundrum about where you start the journey.
Oh, look, absolutely. And this is where, for most people, the as I mentioned before, the little nagging thought in the back of their mind that finally pushes them, or gets loud enough for them to take some action, may be the question that needs answering right away. But of course, talking to a professional who does this every day, speaks to a lot of clients, and is relevant in that age and stage once again of their life, means that they may be able to flesh out other areas as well. And quite often you find, particularly with finances, and when you start involving your financial well-being or your lifestyle with your current lifestyle, and everything else that's going on, family and wives and all the rest of it, there's some connective pieces in there where you've got to pull it all apart and say, okay, well, here's what's going on at the present. Here's what I want in the future. And then what do I need to do to either get me to where I'm going, but also perhaps to protect what I've got at the moment, from an insurance point of view, and also go, okay, well, and another really big component of it as well is saying, okay, well, I've got two big issues. I'd like to pay down my mortgage, or I'd like to make sure I've got a comfortable retirement. It's about saying, okay, well, which one do we tackle first, or do we do a little bit of both and keep a couple of irons in the fire along the way as well? And it's the priority piece that is the crucial component for an advisor. There's a myriad of different levers that an advisor can pull, bucket loads of strategies, but it's about saying, okay, well, look, strategy A is not as relevant at the time for you, because strategy B is going to get you exactly what you want, in the short to medium term, perhaps, while still maintaining, the final goal of perhaps, retiring comfortably. So it's really about, making sure the glove fits on a person by person basis. And that's, why it's terrifically important to make sure that you're seeking out the right advisor. And I've sort of spoken about this a little bit along the way. But it's a crucial element. Obviously, you're going to spend a lot of time, and time's the most valuable component of all of this, of course, not so much the fee you're paying, to ensure that the person you're getting advice from, is looking after your best interests, of course. And thankfully, a lot of the problems of the past are sort of melting away in that regard. But also that you're comfortable in dealing with them on an ongoing basis, because more often than not, the goals that you've got, you're not going to be able to get in 1 or 2 or 6 months' time. And having that ongoing relationship with an advisor to keep you on track, in a similar vein to a fitness coach or something like that keeps you accountable perhaps to your plans and your goals, and following the pathway is also a critical bit before you even go down the path of selecting an advisor. Yeah.
Yeah, absolutely. And I think that's a really important one. The analogy of fitness is actually quite good, because there's a continuing process. It's not just like a one-time set and forget, and then everything will be fine. There'll be a need to revisit, there'll be a need to tune and tweak as things change and as the markets change and all of those things. And that's an important dimension. So it's important that people see this as a journey rather than just a sort of a one-off. The other, of course, is that sometimes it's really good to stand back and just say, well, hang on a moment, have I missed stuff? And, is there an alternative that I should be thinking about, because things change?
Absolutely, and that's the other part. So in a similar vein to the fitness coach thing, you've got a goal that you want to be at X kilos or whatever it is along the way, and you've kept accountable to that plan. But then things change, and in a similar vein with your personal circumstances, you meet a partner, a whole confounding new set of priorities suddenly start entering your life, for example. And it's about then saying, okay, well, look, I've got someone who's got a good idea of, what we were trying to achieve. You can go back in and you can rejig the plans and rejig the strategies to fold in these new eventualities, perhaps, of where your life's going. And once again, it's just coming down to the confidence. And when you're moving large amounts of money around, when you're stopping perhaps discretionary spending today for a future goal, there's a part of you that goes, well, is it going to be worth it if I don't do whatever I'm not doing now because of the future piece? And by having those plans and strategies in place, it gives you the confidence to say, okay, well, look, a penny saved is a penny earned, and at the other end, I'm going to be thanking myself for this decision.
And it seems to me that there are two questions that people should always ask themselves. What is their risk profile? Is it about protection, or is it about taking some risk to try and grow, right? Mm-hmm. And then the other is, what are the right trade-offs, as you say, between all the various things that are out there, and current versus future? How much am I really trying to lay the foundation for a secure future versus actually maximize my experience now? Because actually there are some trade-offs. So risk and trade-offs are actually the two sets of conversations, it seems to me, that have to underpin these sorts of conversations.
100%. And look, a big component of the investment world, if we just zero in on the investment piece for now, is that, let's use superannuation. It's a great example. Long-term investment that, will either work very well for you in retirement, or you'll wish you've done more. That's basically the two pathways most people have at the other end. When do you want to take all the risk? When do you want to deal with the volatility? You want to do it when you've got more time. Okay, so if you're typically a little bit more risk averse in everything else that you do, then an advisor can explain to you and project and build out, and whether it be mathematically or through the strategies that they offer, to say, well, look, exactly that. If you want to take a little bit of risk, now's the time to do it in the early days. You haven't got access to the money, and it's there at the other end. Now, when volatility hits in the portfolio, and obviously it has to be still within the realms of reason, but then you've also got somebody who can talk you through this. And we saw this in March of 2020. The advised clients were the ones that didn't sell out at the bottom and were rewarded for hanging on. And a lot of that was to do with the fact that an external person could offer their advice in a way of saying, well, look, markets do this. I know it's a bit of a knee-jerk reaction, or you feel like you want to do a knee-jerk reaction because losing money is never a great feeling. But if you hold the line, we'll see it come back the other way. And sure enough, within, what are we now, 10 months, that's been a good course of action for anyone that's hung on. And without that, anyone would have sold at the bottom, or would have done those knee-jerk emotional reactions. And so I think, when people are trying to validate the costs of advice, These are the sort of elements that can be built into it. It's not really if I pay this, I save that sort of thing. It's more of a saying, well, look, by having these relationships and by having a sounding board for my emotional responses, which everybody gets. With personal finances, it's an incredibly emotional place, and there's no better place to have a cool hand that sees this or have seen this through their experiences to guide you through it.
And so I think in summary, Tim, we could say question one is, what scope are you after? Is it, soup to nuts, or is it very specific point advice, right? The second is, what risk profile are you actually dealing with, and how risk adverse versus adventurous do you want to be? And thirdly, over what time horizon are you thinking? Those are some of the questions to start asking yourself, which will then guide the route you take with regard to advice.
Absolutely. And look, I guess to answer the theme of today's show, the questions, it pays to have a bit of an idea of what you want to do. Now, keeping in mind that a good experienced advisor will be able to pull apart as we mentioned before, some of the side things and where things start to correlate in other parts of your life. But time and time again, and I won't go too far into stories, but it was always interesting when you sit down with a couple and they've got a set of priorities and the other one has a set of priorities or goals, and it doesn't sound like they've spoken about it much. It's really only come out. It's really only come out in the in the fact-finding confession, so to speak. Look, if that's where it has to come out, that's where it has to come out. At least it's come out. That's the main thing. But having those, a clear idea of some goals and structures, and look, it might even be a case of I've got a bit of an idea of where I want to go, but I'd like a scenario. So I could, I've got a fork in the road in a couple of years' time that I want to maybe finish up work and start down a new career path. An advisor can actually help you with that because they can project what the impact's going to be. Now, look, worst case scenario is from a financial point of view, maybe you've got to really rethink that decision. But the flip side is that maybe you could do it in a year or two earlier than you were planning to. And it's about having somebody do the work and do that sort of calculation projection for you in that scenario that I think is worth paying the money for the service. Just finally, I guess we've sort of spoken a little bit about finding an advisor, and if anyone would like to head to my my article, then we've got some links in there about picking an advisor and actually some of the checks that you need to do before sort of beginning the journey, just to validate that you are going to be speaking with someone that of good character and all the rest of it. There's a number of different pathways, and so what I've spent some time in the article doing is actually working through some things to think about and questions to ask in that advice journey, or it's not so much the journey, but the initial advice component of seeking full advice. And yeah, look, I think it's well worth it. We probably haven't got time to go through them all today, but when you're speaking about investments and things like that, one of the interesting ones that's come up recently is to do with the fact that advisors will typically use a set of projections for, say, what a portfolio will return over a number of years. And as your listeners know, and as you very well know, expected returns over the next few years, and maybe for a lot longer, are potentially going to be a lot less than what they have been in the past. So it's about saying, okay, with the advisor, what projections have you used, for example, and are they going to be relevant in the next 5 to 10 years, using the averages of what we've seen in the past? And maybe the advisor's got an opinion that they are, but there's also an opportunity there to create a scenario of saying, well, look, if it was, say, 2% or whatever it was, 20% or 30% less per year, project that out and just make sure that your goals are still going to be within touch at the other end. And then that way you're creating a base case or a low watermark. And have some comfort then going forward that look, if everything reverts and expected returns go back to the heady days, or it feels like heady days of where they were, then it's all cream, and you've got a lot more to be confident about.
Well, I'm a great believer in scenarios, use them all the time, and I actually think that in the current environment, that's really, really important because nobody quite knows. I think we've probably got the greatest degree of uncertainty that we've probably ever had, and so that has to be factored in too. Tim, it's been a really interesting conversation. The link to your article on Nucleus Wealth I'll put below because I think it's worth reading, and it tries to give a lot of pointers to some of the things that people need to think about. But I do actually come back to my fundamental question, which is you need to know where to start the journey from. and quite often, in my experience, people start the journey from the wrong point of departure.
Look, absolutely. Yeah, I think that, at all ages and stages, there is benefit in seeking financial advice. As we sort of kicked off with, there's a number of different mediums and formats these days, which is wonderful. You don't have to dive straight into the deep end, so to speak. But it's really, I guess, it's really about yourself and going, well, look, if I don't solve this now, in 5 years' time, is this going to be a big problem for me or a little problem? And it's about saying, well, if I'm comfortable in putting to bed, the issue of the day in whatever format, through whatever advice method that I feel is relevant, am I going to be thanking myself for it, in 5 or 10 years' time? Or, if I just don't do it today, is it going to be a really big problem? And am I going to need to really play catch up is the other big issue as well. Am I going to create more work in the future by not doing something simple now?
And sometimes taking the first step sooner rather than later actually pays dividends, doesn't it?
Of course, absolutely. And at least doing the research and making the decision now and not just leaving things to chance. It's never gone well.
Tim, thanks for that. Really appreciate it. We'll put the links and things below. And of course, you power the Walk the World Fund and Walk the World Super. Very important that people take those financial decisions early and make sure that they're set up for the future.
Absolutely. Yeah, always happy to chat to any of the listeners and show them what we do, of course, and let them have a little bit of look, and of course leave the decision to themselves to whether or not it's of use to them. So good on you, Martin. It's been great. Yeah, look forward to chatting again.
Great. Thanks, Tim. See you later. Bye.
Cheers.